Investing is like planting seeds for your financial future. It's a way to make your money work for you. When you invest, you're not just saving, you're growing your wealth. This can help you achieve your financial goals faster. Whether it's buying a home, retiring comfortably, or starting a business, investing can get you there. Today, we're focusing on 3 powerful investment types: business investments, real estate, and options trading. Each has its own unique benefits and risks. By understanding these, you can make smarter choices with your money. Investing isn't just for the rich. Anyone can start, even with small amounts. The key is to start early and be consistent. Over time, your investments can grow through the power of compound interest. Remember, investing is a journey, not a destination. It's about learning, growing, and adapting over time. Let's dive in and discover the exciting world of investing. Business investment is all about putting money into a company. This can be your own startup or an existing business. When you invest in a business, you're betting on its future success. You're hoping it will grow and become more valuable over time. This can lead to big rewards if things go well. Starting your own business gives you the most control. You make all the decisions. You set the direction. But it also comes with the most risk. You might need to invest a lot of time and money up front. There's no guarantee of success. Many new businesses fail in the first few years. But if you succeed, the rewards can be huge. Investing in an existing business can be less risky. You can see how it's performed in the past. For beginners, starting small is often best. So, invest in what you know and understand. Real estate investing is all about property. This can include residential homes, commercial buildings, or even raw land. When you invest in real estate, you're buying a physical asset. This asset can provide income through rent and potentially increase in value over time. The most common way is buying a rental property. You purchase a home or apartment and rent it out to tenants. The rent covers your mortgage and expenses, hopefully with some profit left over. Over time, the property may also increase in value. This is called appreciation. Commercial real estate works similarly, but with businesses as tenants. Another option is fix and flip investing. For those who don't want to deal with physical properties, there are real estate investment trusts, REITs, and crowdfunding platforms. These options require less capital and hands-on management, making them good for beginners. Options trading is a more advanced form of investing. It involves contracts that give you the right, but not the obligation, to buy or sell an asset at a specific price within a certain time frame. This asset is usually a stock, but it could also be a commodity or currency. Options can be used to speculate on price movements or to protect other investments. There are 2 main types of options: calls and puts. A call option gives you the right to buy an asset at a set price. You might buy this if you think the price will go up. A put option gives you the right to sell at a set price. You'd buy this if you think the price will go down. Options can provide high returns, but they also come with high risk. If your prediction is wrong, you could lose your entire investment. However, your loss is limited to what you paid for the option. Options also allow you to control a large amount of stock with a relatively small investment. For beginners, it's crucial to learn the basics before jumping in. Always remember that options are complex instruments requiring careful study and risk management. Section 5. Comparing returns, risk versus reward. When it comes to investing, higher potential returns often come with higher risk. This is true across all investment types. Business investments can offer the highest potential returns. A successful startup could turn a small investment into millions. But the risk is also very high. Many new businesses fail, and you could lose everything. Established businesses are less risky, but also offer lower potential returns. Real estate typically offers more moderate returns with lower risk. Rental properties might provide annual returns of 6 to 12% from rent alone. Add in potential appreciation, and total returns could be higher. The risk is lower because property values tend to be more stable than business valuations. However, real estate requires more upfront capital and ongoing management. Options trading can provide very high returns in a short time. It's possible to double your money or more on a single trade, but the risk is also extremely high. Many options expire worthless, resulting in a total loss. The key is to understand your own risk tolerance and let it guide your investment choices. Section 6. Getting started. Tips for beginner investors. Starting your investment journey can feel overwhelming, but remember, everyone starts somewhere. The key is to begin, even if it's small. Here are some tips to help you get started. First, educate yourself. Read books, take courses, and follow reputable financial websites. Knowledge is power in investing. The more you understand, the better decisions you'll make. Don't be afraid to ask questions. Join investment forums or find a mentor who can guide you. Next, start small and diversify. Don't put all your eggs in one basket. Spread your investments across different types. Set clear goals and create a plan. Finally, be patient and consistent. Regular, consistent investing over time is the key to building wealth. Section 7. Real-life success stories. Real-life success stories can inspire and teach us valuable lessons. In business investing, consider the story of Peter Thiel. He invested $500,000 in Facebook in 2004. This early investment was worth over $1 billion when Facebook went public in 2012. For real estate, let's look at Barbara Corcoran. She started with a $1,000 loan and built a real estate empire worth millions. She began by buying and renovating apartments in New York City. Over time, she expanded her portfolio and eventually started her own real estate company. In options trading, we have the story of Karen the super trader. She turned $100,000 into $41 million over 7 years using option strategies. These stories are exceptional, not typical, but they illustrate important principles. Successful investors often combine knowledge, strategy, and persistence. Remember, behind every success story are likely many smaller failures and lessons learned along the way. Section 8. Common pitfalls to avoid. While investing can lead to financial success, there are common pitfalls that can derail your journey. Being aware of these can help you avoid costly mistakes. One major pitfall is lack of research. Many investors jump into opportunities without fully understanding them. This is especially dangerous in complex areas like options trading or startup investments. Always do your due diligence. Understand what you're investing in and why. Another common mistake is overconcentration. This means putting too much of your money into one investment or type of investment. Diversification helps spread your risk. Emotional decision-making is another pitfall. Fear and greed can lead to poor investment choices. Try to stay rational and stick to your investment plan. Lastly, many investors underestimate the importance of patience. Building wealth through investing is usually a slow process. Stay focused on your long-term goals. Section 9. The importance of diversification. Diversification is a key principle in investing. It's often described as not putting all your eggs in one basket. At its core, diversification is about spreading your risk. By investing in different types of assets, you reduce the impact of poor performance in any single investment. Diversification can work across our 3 investment types too. You might invest some money in your own business, some in rental properties, and some in the stock market, including options. This way, if one area struggles, the others might compensate. But diversification isn't just about different investment types. Within each type, you can also diversify. Remember, the goal of diversification isn't to maximize returns. It's to optimize returns for your level of risk tolerance. A well-diversified portfolio can provide more stable, consistent growth. Section 10. Conclusion. Charting your investment journey. As we wrap up our exploration of business, real estate, and options trading investments, remember that investing is a personal journey. There's no one-size-fits-all approach. Your path will depend on your goals, risk tolerance, and personal interests. Business investments offer the potential for high returns, but come with significant risks. Real estate can provide steady income and long-term appreciation, but requires more upfront capital and ongoing management. Options trading offers flexibility and leverage, but demands careful study and risk management. Each investment type has its place in a well-rounded portfolio. The key is finding the right balance for you. Start by clearly defining your financial goals. Are you looking for long-term growth, regular income, or a mix of both? Consider your risk tolerance. As you begin your investment journey, start small and learn as you go. Don't be afraid to seek professional advice. Remember, investing is a lifelong learning process. Happy investing! If you enjoyed this video, make sure to hit that like button and share it with your friends. And don't forget to subscribe to our channel for more amazing content. When you subscribe, be sure to click the bell icon so you get notified every time we post a new video. Your support means the world to us and helps us keep creating the content you love. Thanks for watching, and see you in the next video.